This is the Best Stocks to Buy podcast. We use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week. This podcast is made possible by Content Management Group, a registered investment advisor firm. If you've been enjoying these podcasts, we're sure you'll like our Saturday morning newsletter just as much, if not more. It is informative but light and includes personally curated articles on investing, money, and just plain leisure fun that we think you would enjoy. Just visit our website at www.connormg.com and click on newsletter to subscribe. All right, on to our presentation. Hi everyone, this is Mathis Connor with Connor Management Group, and this week we're going to be looking at the best growth stock to buy right now. Today is Tuesday, June 30th, 2015. And this company is in the airline industry, and we see its 6-month upside potential at positive 33.9%. And on to the next slide, and we see that the name of this company is called Southwest Airlines. Their ticker symbol is LUV, and obviously this company is in the airline industry, and we see their 6-month upside potential at 33.9%. On to the quick facts slide. Here's a business summary description for the company. Southwest Airlines is one of the largest carriers in the United States by revenues and the largest by passengers flown. The company specializes in low fares and short hauls. It uses a point-to-point model versus the common hub-and-spoke operating model. The company acquired AirTran Airlines in May of 2011. At the end of 2014, the company served 96 cities and operated a fleet of 678 aircraft. They presently have 321 additional aircraft on order, and to me that sounds like they're pretty optimistic about their business. All right, their website is www.southwest.com, just as it sounds. They're headquartered in Dallas, Texas. The company was founded in 1967, and they have 47,005 employees. On to the next slide, it's the products and services slide, and what we have on this slide is a picture of the Southwest logo, a photograph of a Southwest airline, a colorful airline taking off, a system-wide map showing all the cities they serve in the United States. Most of the capacity, as they describe it, is in the West and in the Southeast, although they have pretty good representation throughout the country. Additionally, we have another excerpt from a recent investor relations report, and it says as follows: 30,000-foot view. As of December 31st, 2014, Southwest Airlines operated more than 3,400 daily flights, serving 93 destinations across the United States and 5 additional countries. Southwest service to San Jose, Costa Rica, began in March 2015. Puerto Vallarta, Mexico, began in June of 2015, and subject to governor approvals, service to Belize City, Belize, begins in October 2015. And on to the metrics slide. Over the last 12 months, the annual revenue for Southwest Airlines was $18.9 billion. The net income over the last 12 months was $1.4 billion, and the cash from operations was $3.2 billion. The operating margins for Southwest in 2014 was 17%, and in 2015 it is tracking and expected to be 20.0%. Onto the valuation metrics. The trailing PE ratio presently stands at 13.9, and the forward PE ratio stands at 10.1. So that relationship of 13.9 to 10.1 implies that analysts expect earnings to increase significantly over the next 12 months. The PEG ratio is at 0.4. Usually anything at 1.0 or less is considered a value and buying opportunity. The price to sales ratio stands at 1.2. It's not too expensive as well. The price to book ratio stands at 3.3, and the enterprise value to EBITDA ratio stands at 6.0. The dividend yield for Southwest Airlines stands at 0.9%, and the average dividend payout ratio over the last 3 years was 9%. And on to the price chart for Southwest Airlines. Over the last 12 months, Southwest is up 21.97%. So they have appreciated quite a bit, and they've actually experienced a bit of a pullback as of late. Back in March of 2015, the stock was just below $45 and is now at around $33, $34. We're not exactly sure of the reason for the pullback, but we are optimistic on the stock. And at the end of the day, a 22% increase over the last 12 months is still appreciable and significant. On to our next slide. We call it the Why Now, the Bull Rationale. And basically, we list our reasons for why now is a good time for buying Southwest Airlines. Number one, the company is expected to continue to increase its sales and cash flow per share over the next 12 months. The company is experiencing improving margins, which means decline in expenses. Additionally, the company is buying back some of its shares. So all those reasons also lead to a low valuation, or I should say low valuation metrics in the near future, which will put pressure on other companies to go out and buy the stock. So our main reasons for why this is a good reason to buy the company right now is increasing sales, improving margins, additionally buybacks in shares, which leads to low valuation metrics in the near future. And on to the summary slide. The financial statement quality for Southwest Airlines we consider to be excellent. I mean, they can take care of their debt, all of the outstanding debt, quite easily within 2 years. The price pattern trend has been increasing. Although the stock has pulled back a bit over the last 3 months or so, it is still up 20% versus a year ago. And our overall market outlook is somewhat flat to maybe slightly negative. We're seeing more overvalued names than undervalued names. But overall, the economy is still performing decently and is expected to perform better in the third and fourth quarters. So overall, our market outlook is flat to maybe slightly negative. Maybe there'll be some pullback in stock prices just because the number of stocks are somewhat overvalued. The recent closing price for Southwest Airlines was $34.78. Our 6-month price target is $46.47. And that gives this company a 6-month upside potential of positive 33.9%. So it's for all these reasons that we believe that Southwest Airlines is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Just to close, remember that Connor Management Group is a registered investment advisor. In addition to being a source of quality stock investment reviews, we are money managers, not financial planners. Our sole goal is to grow our clients' savings and retirement accounts in a personalized manner as quickly as possible using one or more of our strategies. We can manage all or just part of your IRA account as well as a regular taxable account. Just visit us at www.connormg.com to review our service, or just give us a call at 281-947-2201. Have a great week.